Good afternoon, everybody. My name is Russ Wilson. I'm with Seashore Realty LLC, local real estate agency here we serve both Panama City and Panama City Beach and the surrounding area. And I am here with Paul Wunstell, a local insurance agent. Your office is located right here downtown Panama City, right, Paul?
Yes.
Okay. And I'm here to ask Paul a few questions about insurance, home insurance, and how that fits into the buying process. So without any further ado, Paul, I'll start asking you a few questions.
Yeah, Russ, thanks for having me. First off, really looking forward to helping your buyers as they look for their home here in Florida. Hopefully, we can get through these questions and give them a better idea of what they're going to entail as they start getting into these home purchases and what they need to be looking for to both improve their premium and find the home that makes sense for them.
Perfect. All right, let's get started.
I don't know how we compare to around the country, but it's expensive here in Florida. So can you kind of tell us what's going on with the legislature? Are they doing anything to lower the rates? Are they coming down as we speak? Kind of where are we at with insurance in Florida?
Yeah, it's a great question. We were in a bind several years back. We had a lot of carriers leaving the market. There was a lot of fraud related to post-storm activity as it relates to litigation, as it relates to contractors that would come knock on your door, willing to fix your roof, your house, things like that. Unfortunately, those claims activities associated with those caused carriers to have to pay out an enormous amount of money, which then in turn bankrupted some of them. They could not afford to buy reinsurance to stay in business. So we had a lot of carriers leaving the market. And so the carriers that were wanting to stay and carriers that were willing to come to Florida needed legislation to change. So they kind of, told the state, hey, this is where the rubber meets the road. We're in a bind. You're not going to be able to have home insurance for all your constituents. And Citizens program, which is a state-funded program, was starting to get way too many policies because they were never built for that capacity. So legislation did make some changes to the way claims are paid out, how quickly they can be paid out. They closed a lot of loopholes that a lot of attorneys were figuring out ways to, cause claims to be higher and higher and higher. So those were all, nipped in the bud. And then, so we had to wait for claims to cycle through, all get paid out before the carriers could realize, hey, these things are now closed out. Now we can kind of reset our rates based on what we know and how things need to go forward. And so we're about 2 to 3 years out of that. And we have seen rates sort of settle down. I think the issue with Florida for many, many years is rates were probably way lower than they needed to be. And so we had this kind of false market where rates were so low, people got so used to them, and you had some of the carriers, the national brands like State Farm and Allstate and Farm Bureau for years saying we can't compete in Florida because the domestic carriers are setting their rates way too low. And so we started to see those things rise to a rate where they probably needed to be all along. And although it hurts the bottom line of every homeowner, I think what we're seeing now is the settling of the rates to where they need to be and where they probably should have been all along. We have seen some rate decreases, some filings for some rate decreases. So as an insurance agent, we know these things are cyclical, and we have seen so many changes, I would say, over the last 10 years. But now we're probably seeing at the most steady spot that we've seen in a while.
Well, good. I know as a homeowner, I like stability. Even if I may want it to be a little lower, but as long as it doesn't go up, I'm kind of happy with that. But anyway, when someone's shopping for a home, because that's what I want to try and help my viewers with, is to get those costs under control on the front side because it's harder on the back side. What kind of, and I've got some specific questions about some specific features, but what kind of basic features in a home might help control the insurance rate? Big picture, what are we?
Yeah, so you got two main issues when underwriters are looking at how to rate premiums, rate the homes for premiums. One of them is, eligibility. What's going to make this home eligible to even carry insurance on it? So that's one aspect that we have to deal with. And things like that are the condition of the home as it relates to the exterior look of it. Or is it beat up? Is it broken down? And when you go inside, again, is it insurable as it relates to the electrical panels? Do we have bad wiring? Do we have aluminum wiring? Plumbing fixtures, visible plumbing fixtures. What's those materials? Are they outdated? Are they leaking? Do we have active leaks? HVAC system. What's last time it's been updated? All those things focus on eligibility. So the first hurdle we have to overcome is that home insurable? And we have inspections that are required that will show that. And I think you have some questions associated with those, and we can talk about those in a minute. But that's the first hurdle we overcome. Is this home insurable? Yes, we got that. Okay, now we start looking at what's going to affect the premium. And some of the things that affect the premiums are, what's the exterior cladding of the house? Is it vinyl siding? Well, vinyl siding's been known to not do well in windstorms and hurricanes because of projectiles flying around and breaking the vinyl siding. So they're going to get the lowest tier rating. Well, let's talk about hardy board. Well, that's a masonry type of siding, so it's going to hold up a lot better, so it gets a good rating. Same thing with masonry veneer, brick veneer. And then you have concrete block, CMU. So it kind of tiers as it relates to that. Then you start talking about roofs, age of roof, type of roof. Those things also affect the premium. Location, and again, I know these are things that we're going to get into here in a minute, but those are the factors that both affect eligibility as well as the premium.
Well, and I think that's my next question. As the roof in particular, everyone talks about roofs. I mean, that's the first question people get out of the car and ask you, how old's the roof? So how much does it affect the age of the roof and the type of the roof? How much does that affect the premium?
I would say it plays more of an eligibility role as more than it affects premium. It does affect premium. Obviously, a newer roof is going to help with your premium, but underwriters are looking at it more from a perspective of what type of roof is it, and then what's the age of it. Because when you talk about what's the number one claim here in Florida, it's going to be wind-related damage, right? So you're going to have some sort of roof damage associated with some sort of tropical system or something like that. So they want to know, is this roof going to hold up, or how much is this roof going to cost us in a claim? And so when you have a newer roof, obviously it's probably going to withstand better. When you have a metal roof, it's probably going to withstand better. If you have a tile roof, that'll probably withstand even better. So I think it has more of an effect on eligibility more so than premium. If we're weighing the two. Does that make sense?
Yeah, it does. So as long as it meets a certain standard, the premiums probably be.
Yeah, and that has been relaxed, because when we go back to what we were discussing early on in the conversation, when we had the biggest issues we had in Florida a couple years back, we saw a lot of carriers saying, listen, if the roof is greater than 7 or 8 years and it's a shingle roof, the home is not eligible. Like, we couldn't even get insurance on it. So now that's expanded to like 15 years for a shingle roof. Some will go as much as 20 if you can get a roof inspection that says, hey, this roof has at least 5 years of life left. As it relates to metal roofs, again, now we're looking at 20, 25 years, and tile roofs are 25, 30 years. This becomes a conversation that gets a little testy with a lot of homeowners, because you have roofers that are telling people this is a lifetime roof. This is a lifetime roof. Well, it may be from the perspective of the roofing warranty and things associated with the fact that it could stay on your house for a lifetime. But as it relates to eligibility for insurance, underwriters don't look. There's no such thing as a lifetime roof. There's going to be a cap on the age. And now, to control some of the premiums associated with roofs, they've also they've created a depreciation scale. So you can sign up for full replacement cost on your policy, and it's going to cost you more. Or you can sign up for a depreciated value roof on a claim as it relates to wind. We're not talking about fire. A fire claim, they're always going to give you a replacement cost value. But as it relates to wind damage from a afternoon thunderstorm, tornado, or hurricane, you can buy an endorsement that will lower your premium if you say, hey, yes, I'm okay with them depreciating the value of my roof over time. So when you get to 15 years on a shingle roof, and you get a claim, odds are you're not going to get much money, especially after your deductible. But that's a chance that you're taking. Because again, this is not a warranty program. Insurance is not a warranty program. You should be taking care of your home, and taking care of your home means replacing your roof when it's time to replace it, not waiting for a hurricane to get a brand new roof.
So in other words, it's kind of like you can pay up front or pay the higher premiums and get, on the back end, if something happens, you're covered, or you can lower those premiums and take your chances on the back end.
That's right.
Okay.
Yes, a way of self-insuring.
Exactly. Okay, I understand. Now, what about an older home versus a newer home? Is that goes into that eligibility category or the premium category or both?
No eligibility issues unless it's a location issue. You know, as we see houses like on the Gulf of Mexico, there could be an eligibility issue. Just not every carrier is willing to write when it's on the beach, when it's on the sand. You got to come off a little bit. But there are carriers that will write on the sand all day, especially a new home. So it's not really an eligibility issue. It is a premium issue. Newer homes are going to carry a much lower premium because when you look at what's going to possibly be a claim on that house, it's not going to be anything associated with plumbing, electrical, fire because the house is brand new. The claim you're going to get is associated with something that's God made, like a hurricane or tornado or something like that, and those are out of your control. So the underwriters are knowing that, hey, we're willing to take a risk on a lower premium because odds are, based on statistics, because this is all about statistics as it relates to, insurance. Odds are newer homes they're not going to have a claim unless it's a hurricane or something like that.
Okay. Now, kind of an offshoot of that, not necessarily new versus old, but about the quality of the manufacturing. Let's say I've got home A that someone had custom built. It's got all the bells and whistles. I mean, really tightly made. They decide, now I want to move to Montana, so they're going to sell their home. Mm-hmm. That 2,000 square foot house, ensuring that and the quality that it is, versus one of these houses that someone put up overnight. Is there a difference in premiums on those two types of houses, if that makes sense?
Absolutely. So premium is always going to be based on the replacement cost value of the house itself. In insurance, we deal with replacement cost, not market value. So you deal with market value. You get comps on houses in similar locations, similar square footage, similar type, right? And then it's all about proximity to water, schools, shopping, all that stuff. That's a market value. It also considers the cost of the dirt that the house is sitting on. And insurance, we deal with structure only, and it's the replacement cost value of the house. So when you bring up a question like that, the first thing we do is determine what's the replacement cost value of the house. So what's the square footage? And then we start looking at, is it a custom built home or is it a tract home? Does it just have basic builder's grade materials in it? Or does it have custom flooring, custom countertops, custom cabinetry? All that we build into what's going to be determined as a replacement cost value. And then that value is what we're going to insure that home for, because the carriers, underwriters say you have to insure a house to its replacement cost value. And they will double check what's called a replacement cost estimator, is what we do when we go in to start a quote. First thing we do is figure out what's the replacement cost value of that house. So.
All right. And you mentioned when you were talking about that, I think the question before about location as far as flood zones. Are the flood zones going to affect the insurance rate? And I know there's a separate thing, flood insurance, because I carry flood insurance. Yeah. Will having that separate flood insurance policy, it's a two-part question, so let me back out of that. Okay. Back to the first question, flood zones, is that going to affect the insurance rate?
Yeah, absolutely. A lot of people hear X zone and they think it's a non-flood zone. I always have to correct people. The entire state of Florida is in a flood zone. We're an island essentially. So X zone just means you're the least likely zone to flood. And then you have all your A zones, AE, and there's a bunch of other ones. There's even a V zone, which is the higher risk zone. So yeah, when you get away from the X zone, typically you're going to carry more premium because you're statistically, in the 100-year look, you're more likely to have a flood at that house based on its location. So if you're looking to buy a home, you want to know what flood zone you're in. You certainly want to speak to an agent about getting a quote. And if you can get an elevation certificate on the house, which is going to determine the levels of the home compared to the community. And a lot of times, if the builder knew what the community levels were, they should have or could have built the house up to be above those. That way it would reduce the premium. So to answer your question, yes, the zone is going to affect the flood policy, not the homeowners. Homeowners is a different policy than flood 99% of the time in Florida. So you're always going to have a separate flood policy.
Okay. And again, you mentioned kind of earlier on in the interview about home inspections themselves. Again, a two-part question. I'll start with the first part first. Are there inspections that the insurance carrier is going to require? We're not going to insure this home until you look at the following things, and what are they?
Yeah, absolutely. So you kind of break it into two categories: a brand new home and an older home. And when I say an older home, let's just say 20 plus years. So for 20 plus years homes, you're absolutely going to have two inspections. One of them is called a 4-point inspection, and it looks at the electrical, it looks at the plumbing, it looks at the HVAC, and it looks at the roof. Okay, that's an eligibility inspection. So when we talked earlier in the conversation about what makes a home eligible, that's why it's important, because you have a certified inspector looking at these things and saying, hey, this is the age of these, and this is the material of these, and all of those play into whether or not that home is eligible, sometimes with that particular carrier, because every carrier may have different eligibility standards. All right. And then you have something called a uniform wind mitigation inspection. All right. And it looks at the way the roofing system was attached to the home, both at the decking and at the walls. But then it also looks at every opening that the house has. So when I say opening, I mean windows, doors. So your front door and your back door may have glass window panes on them, as well as your garage door. All right. And all those can carry projectile hurricane ratings. All right. And so that's a discount inspection. So it's going to tell us how much mitigation has been done to that home to reduce wind damage potential. And those are discounts that we can put on the home. So one's eligibility and one's discount. They're both required on a home that's at least 20 years old. All right. So we got a home that's newer than 20 years old. Odds are we don't need a 4-point inspection. The carriers are saying, hey, we're good with this house being within 20 years old, so we know there's probably no issues with this stuff as it relates to plumbing, electrical, and HVAC. Odds are, though, that house has had a roof replacement in the last 20 years, right? So that's why the wind mitigation is typically going to be wanted by the agent and underwriter for the carrier, so we can see, hey, do we truly have a roof replaced? And then what's the associated discounts with it? Is it, the nail sizing, spacing, also hurricane clips, straps, there's all that stuff on there, so we can give a big discount. And then sometimes the houses are hurricane proofed, so to speak, where they put in hurricane projectile rated windows and they've changed their front and back door, they hurricane rated their garage door. So all those things will absolutely play a factor in the premium. So, but to answer your question, there's kind of a bucket of houses, 20 years plus, 20 years new, and those inspections may change based on the age of the house as far as requirements.
Okay. Now, those are the two inspections that are typically required, as you said. I guess I'm asking a little insider information. If I was going to, because there's home inspectors there, and they go out and they look look at things. What are some things, if you, off the top of your head, that you would have if you were to buy a home and you were having a home inspector go out? What can you tell me? Look, I want you to look at this. I want you to look at these things and make sure they're solid. Am I making sense with that question?
Yeah, I mean, first and foremost, as it relates to eligibility, I think it's crucial that you're looking at the plumbing for any active leaks or evidence of leaks. So when there's probably been leaks with the plumbing fixtures, because you typically will see stains below. How old is the water heater? Water heater is super important from the standpoint of a lot of carriers want to see a water heater that's no more than 15 years age, maybe 20 tops. So you want that to be identified by the inspector, the age of the water heater. HVAC system, has it been serviced? How does it look? Again, especially if it's in an attic on a 2-story home, that can be a serious water claim if that thing clogs up and starts leaking everywhere. So water heater relates to being inside the home or being in the garage. That's a factor too. Does it have a drip pan if it's inside the home? If it's in the garage, a lot of carriers won't require a drip pan, but if it's in the home, you want to see a drip pan. And again, is there any evidence of mildew, mold, buildup, things like that? So, and electrical panels, if we're talking about a serious old home, 50 plus, you want to make sure those panels have been changed out. You want to look for anything like aluminum wire, because that's a huge ineligibility issue. Cloth wiring, where you see the old time wiring with the cloth around it. Those things are going to make the house totally ineligible to be insured. Maybe you can get it with Citizens, maybe not. But odds are, if you see any of that stuff, the current homeowner is probably already struggling to have insurance on it, or the carrier that they have on it is not aware of some of that stuff yet, because maybe they haven't done a spot inspection or something like that. Because again, there's been so much fraud activity in the state of Florida not only are you going to have those inspections done pre-sale, but when you write insurance on a home, that carrier that you put it with, they're going to do an inspection as well, just to make sure that everything that showed up on those inspections is exactly what's on that home. Because a lot of people will turn in inspections that's for a different home and they don't recognize it, or they lied on the inspections just to try and get insurance written on it. So they're going to do sort of their due diligence and come back with their own inspector just to make sure that that house is insurable and exactly the way those inspections said they were.
Now, what popped into my head as you were talking, it happened to me, I don't know, a couple of years ago. Inspectors or the insurance companies will sometimes send out an inspector to do a follow-up just to make sure things haven't changed, or is that just my company that did that?
Maybe the company, or I mean, without knowing the particular issue, but sometimes if there's a borderline eligibility issue and maybe they make an exception, they may have a, saying, hey, you got 30, 60 days to replace this 16-year-old water heater. Yeah, we'll insure the home, but you have to replace this water heater. Or hey, we saw one of the fixtures behind the toilet. We didn't like the way that piping looked, that had some corrosion or something like that. We want you to change out that particular thing. So you may see a audit inspection for that stuff, or they just may require you to send in proof that it's been changed out via pictures and a licensed plumber or electrician with an invoice or something like that.
Okay. Now, are there any kind of safety features, or like, the first thing obviously that pops into my head is one of these Ring doorbells or these security cameras. Is there something or anything that people can either look for or install or negotiate as part of the contract, anything like that, that's going to lower those insurance rates?
Yeah, I mean, the alarm, fire alarm, burglar alarm, that's always been a discount, typically on average about 7 to 10% off the premium. But it has to be a monitored alarm system. It can't be Ring. It has to be monitored by someone like ADT or another, there's multiple vendors out there, but it has to be monitored. So you have to turn in a certificate that it's being monitored. And if it's just burglary, it carries one discount. If it's burglary and fire, it'll carry a bigger discount. So that's one that they can do. If you're in a gated community, you get a discount. If it's a gated community with a 24-hour security guard, that's another discount you can get. And now they have water system discounts as well, where if there's a feature on this, the new homes are getting this water sensor that you can put on the plumbing fixtures that will tell you if that fixture has a possible leak, and it'll kind of shut things down. So that's another discount that the carriers are looking for as well.
That's new to me.
Yeah, it's in the last 2 years.
Oh, okay.
Yeah. So you see it going in on a lot of brand new homes, but I believe it could be retrofitted on existing homes.
All right. Okay, we're getting close to wrapping up, but obviously in this area, not so much Panama City, but Panama City Beach has a huge rental market.
Yes.
What pitfalls? What are people that are let's say me, I decide I live here in Lynn Haven, but I want to get a rental property over there in Panama City Beach. Are my rates going to be the same, or do I fall into a different category? What am I looking for a rental property as far as insurance differences? Yeah,
so it's a different policy. Now we're walking away from a homestead policy where this is your primary or secondary, and we're moving to what's called a dwelling policy now, which has a tenant in it. Now, there's different types of investments. You can buy an investment that you're going to put an annual tenant in, or you can buy an investment where you're going to have short-term rental exposure where they're only in there for 3 or 7 day minimum. And so you're introducing now a new feature to that policy that could cause claim activity. So again, this is all based on what can cause claims. Well, anytime you have a renter in there, they're never going to treat the property the way you would treat it as if it was your own. Annual tenants will get a much preferred rating, almost like a homeowner rating. So you can see where those policies are pretty much the same as it would be if this was your home. Underwriters like annual tenants because they tend to treat the home better. And so they'll ask for the annual contract. They want to make sure it's an annual tenant. The difficulty comes in when you move to short-term rentals. And whether it's you're buying a condo or you're buying a single-family dwelling or townhome, it just introduces a lot of liability exposure. It introduces so many other factors. So I say that from the standpoint of, it's not that we can insure it, but we go from this, where we have 40 carriers that can write any given property at any given time, to, okay, how many will write a 14-year-old condo on the beach with short-term rental? Now we're here, we got maybe 4 carriers that we can use to quote that property, because they're the only ones that will write a short-term rental in Bay County, and it's a condo. So that reduces. So now we're at the mercy of the rates associated with those carriers. So it's there's nothing we can do. When we're here, we can shop all across, and we're here with homeowners policies. We get here with short-term rental dwelling policies. So what you want to look for, obviously, if it's a newer property, it's always going to help. Condos and the big concrete buildings are going to be much favorable. They carry a much better rating because they're wind resistant, and typically you're going to have a condo association that's covering the exterior of the building. So now we're talking about walls in type coverage. We're talking about, you still need wind coverage because your windows and stuff can be blown out, and you got wind driven rain, so you need to carry hurricane and wind policy deductibles, but that reduces the amount of claims activity associated with that. So to answer your question, it's just going to be associated with where the property's at, again, the stuff we talked about earlier as it relates to the cladding types, things like that, how old the property is, and then what are you putting in there, an annual tenant or short-term rental.
Okay. I think we've covered most of the things that I wanted to cover, but is there anything, kind of a catch-all question? Let's say I do the things that you've outlined. I've done the inspections, I've looked, and I get this quote, and it's still just a little bit higher than I want. And I think I know the answer to this, but I want to ask it anyway. Is there anything we can, is there something else we can do in the insurance agent, world to get that quote just a little bit? Is there any bartering involved? Can we?
Well, I think this is where the importance of having a good agent, specifically in this area, a broker, not to toot my own horn, but as a broker, again, we talked about the availability of carriers that you can write with. In Florida, it's super important that you have options, whether it's the first time you're buying it, or you're talking about your renewal comes in and now it's spiked up, and hey, Paul, what else can we do? This premium jumped up. Well, remember, I got all these different carriers that I can reshop this with. So to answer your question, make sure you're using an agent that has multiple quoting options. They represent many different carriers, and they're shopping for the absolute best rate possible for you by shopping across all these different carriers. Beyond that, how much do you want to self-insure? Your agent should be talking to you about ways to reduce the premium. Is that your question? Then okay, you can self-insure a little bit. And when I say self-insure, I mean deductible wise. What are you willing to self-insure with? So instead of a low deductible, are you willing to take a higher deductible and pay out of pocket should a claim happen? Are you diligent enough to put that money away each month in preparation for that one time when you have a claim and you have a high deductible and you need to come out of pocket that amount of money? That's going to reduce your premium. So beyond having a broker shopping it all around and the ability to self-insure some, there's not much bargaining after that. We're at the mercy of the rates of the carriers. It is what it is. But looking for a newer type of property that's not a long age, having a good roof on it, it's insurable. So we talked about our eligibility requirements. All those things are going to help us at least get the best quote we can.
All right. And I guess I said the last one's a catch-all, but is there anything that you can think of that I wish this guy would have asked me? I'd like to really tell these buyers. If there's not, if I've done this wonderful comprehensive interview, then we're good to go. But is there anything else you can think of that you'd like to add to this?
No, I think your questions were ones that are going to be valuable to them as they're shopping around and speaking with you, as it relates to the experience of buying a home. They're going to run into each one of these issues. And if they're talking to the right agent, if they're talking to the right, I'm speaking of, I should say, they're talking to the right realtor and the right insurance agent, this stuff should come up and it should be worked out. They should have a good idea what these costs are going to be on each one of those properties that they're interested in, so that they can make the most educated decision on if that property is the best fit for them. So, but I think your questions were right on as far as what they're going to be seeing with the shopping experience here in Florida.
All right, great. Paul, I really appreciate your time. Again, this is Paul Wunstell of Goosehead Insurance. He's right down here in Panama City. And I am Russ Wilson with Seashore Realty LLC. Give me a call and we'll see if we can find that perfect property that we can get insured at a rate that you can start on that journey in home ownership and have a long and happy life with your house and just really enjoy it. So thank you very much for your time.